understand the texture of the market and much more. What could this 1 hour hold, and what lies ahead for the market? We have Shibani Sircar Kurian, the Senior Executive Vice President and Fund Manager at Kotak Mahindra Asset Management. And Shibani, hi, good afternoon. Thanks so much for your time. Give us your general reading of the market, given that so much has happened over the weekend and the yesterday and today's as well. You have news coming in on textiles. You have that China boost coming in for rare earth metals, tunnel digging equipments, fertilizers, all of them are doing very well. With so many tailwinds and demand boosts now, would it be safe to say that only good days lie ahead for the markets?
Hi, good afternoon. So when you look at our markets and the way our markets have been performing, calendar year to date, relative to the emerging market pack, India, despite having fairly stable macro parameters, has underperformed. Our view has always been that given the uncertainty of what's happening on the trade and tariff front, especially globally, it's better to be looking at domestic facing sectors where demand trends appear to be improving. The recent changes that have happened from a policy perspective have all been supporting this thesis, and that therefore our overall focus remains on domestic facing sectors. If you just take a step back and look at starting from the budget, which resulted in tax cuts at the mass income segments, post that you've seen policy rate cuts by the RBI, and now the recent announcements that you've seen as far as GST rationalization is concerned. All of this is aimed at boosting domestic consumption, especially discretionary consumption. So therefore, that's one factor to look at. So policy clearly is supportive. Second, monsoons continue to remain fairly favorable, and we've, apart from the monsoon, seen signs in terms of data that rural demand is clearly on an uptrend. So that's the other segment where clearly there is an improvement as far as demand goes. And of course, we are moving into the festive season. The third aspect is the quarterly earnings and corporate profitability. Last year saw fairly muted trends on corporate profitability. Q1 saw numbers that were largely in line with estimates. And our expectation is that going into the festive season and second half of the year, given the kind of policy boost that you've seen, you should start seeing some improvement as far as corporate profitability goes, which means that for FY26, you will possibly end with somewhere with low double-digit earnings growth. In this context, when you look at our valuations, large cap valuations as far as Nifty is concerned is trading at a slight premium to its long-term averages. Mid caps are also at a slight premium, while small caps are at a significant premium to long-term averages. In that construct, also, when you look at the Indian multiples and premium of India's valuation as compared to the EM, there the valuation premium has come down to long-term average levels. So in that context, we believe that risk reward for the market is favorable for large caps and to some extent mid caps, but one has to be very, very selective and stock specific within the mid and small cap bucket. And if you look at India today from a domestic macro perspective, we continue to be fairly well placed.
Absolutely. Shibani, good afternoon. And yes, there are many uncertainties coming from the global front, and in particular, the tariff jitters are still up and running. But at the same time, we also see positive news flows. And in the same lines, in a major breakthrough, China has lifted export curbs on fertilizer, rare earth, and tunnel boring machines. Now, these were exactly the three key demands India raised last month. How do you see the automobile sector performing on the back of these news flows, and at the same time fertilizer stocks also? Because post this news flow, we have seen an upsurge in all of these, and of course automobile sector for that matter was working yesterday as well, but then a positive news flow has supported the sentiments even more.
Absolutely. So if you look at automobile as a space, that's been a segment that was underperforming and has been a laggard. However, as we were discussing, apart from the news flow that you mentioned, if you look at the policy support that's going into the segment, starting from the tax cuts, as well as the rate cuts that have been announced on the policy front by RBI, and then culminating into the GST rationalization proposals, I think there is a concerted policy focus in terms of boosting demand, especially at the bottom of the pyramid, that therefore helps in segments of automobiles, especially at the entry level to a four-wheeler segment as well as on the two-wheeler space. I think the other factor which is working well for the sector is that rural demand, which was missing for a considerable period of time, with inflation now remaining under control, real rural wages have started to move up. and therefore that is positive as well, especially where the two-wheelers and again the entry-level four-wheelers are concerned. So therefore, from this segment, if you look at the overall basket, the two-wheeler space is something that we are positive on, as well as some parts of the passenger vehicle segment, where we believe that demand should improve. And of course, the proof of the pudding would be going into the festive season. The same corollary holds true for the fertilizer space as well. I think monsoons having been good is something that is also likely to boost demand as far as the fertilizer and the agrochem pack, especially those which have a lot of demand coming from the domestic facing segments are concerned. So within the pack, I think both of these segments benefit significantly from the recent announcements that have been made on the policy front.
So that's the take on some of those sectors to watch out for. But Shibani, what is your take on the entire GST set of announcements that we've seen? Of course, you have names like white goods, staples that stand to gain the most, and even select autos that could come down to the 12% or rather, pardon me, the 18% bracket. Give us a sense of where do you think the biggest beneficiaries could be seen, which sector could get the biggest push here, and how should one restructure their portfolio, if at all, to be in line with these GST announcements?
Yeah, absolutely. So, of course, we'll have to wait for the fine print as far as the GST announcements go and the final tax brackets and, what falls into what. But, clearly the focus of rationalization of the tax bracket is aimed in some way or the other to provide that boost that is required for consumption, which was possibly lagging behind. So I think if you look at GDP data over the last couple of years, consumption has been something that has seen muted trends, and therefore the policy focus. If you look at back of the envelope calculations go, this kind of GST rationalization could add to about 25 to 30 basis points of GDP in terms of the consumption space, and therefore that clearly is a positive. If you look at in terms of sectors such as the entry level vehicles, as far as two-wheelers are concerned, passenger vehicles, cement is another space which could see some amount of impact or positive impact because of the GST tax rationalization. Parts of consumer durables, discretionary spends in segments such as footwear, processed goods, etc., are again segments that could benefit because of the proposed rationalization of taxes as far as GST goes. But again, we'll have to just wait for the final fine print in terms of what falls into what tax bracket. But the broader message is clear. I think the focus is on boosting consumption, especially at the mass level as well as at the bottom of the pyramid. The second aspect, I think we should also look at it in conjunction with the rural demand. Again, rural demand is seeing an uptrend. And again, many of the sectors that we spoke about also benefit because of that. So all in all, I think a fairly good space to be in as far as the discretionary consumption pack goes.